regards to, I think, the first half performance, I think that most people would agree that it has been quite underwhelming, as well as, little less than expected regards to, I think, the deal activity.
Yeah. And the drag is coming mainly from?
If you look at it basically, and look across all the deal activity, it's been down about 25 to 35%. M&A, IPOs, follow-on activity, and so on. China alone is down about 29%. So that actually accounts for a lot of the downturn in the activity.
So rate cuts can't come soon enough?
Well, I would say rate cuts is one factor, but I think there are others in play. I mean, obviously, the market conditions have to be right. Yeah. If you drill down to the ASEAN 4 and specifically, the deal activity has even dropped even further, by almost basically by close to about 40%. Only about $1.1 billion was raised in terms of IPO. And for us at CGS International, and for us, we're lucky because I think that we're a new kid on the block, and we managed to to do about 29 deals in the marketplace. But on the equity side, only about 5, raising about 1.8 billion.
Yeah, Carol, so there's so much to discuss in terms of the markets in the ASEAN region. One of the key themes that many investors are speaking about, I'm sure your clients as well, is the impact of supply chain shifts from China elsewhere. And there's growing discussion and evidence indeed of more Chinese investment coming, for example, to India and Vietnam, but also to Malaysia and Thailand and so forth. Are you seeing any of that from a deal perspective? Is that helping your business at all?
Absolutely right. In fact, I just came back from a trip from Beijing, and I think that the excitement from the Chinese companies is there. They're all looking to expand overseas. The China Plus One strategy is definitely in focus. I met about 10 to 15 private equity firms, and they're all looking to expand into ASEAN markets. So definitely the impetus is there. And from our perspective, CGS International, just last Friday, we launched actually the first dual listing of a Chinese stock to be listed in Singapore.
Great.
The first ever. And we're working on 3 or 4 other mandates, and I think that's going to, with this happening, I think it's going to open the floodgates to more listings in Singapore.
And do you see any risk that if the U.S. starts to, say, crack down not as much on Chinese manufacturers, but then broadens that out and says, well, if you're just setting up a plant and not doing a lot of added value, that sort of camouflage Chinese exports, is that a risk to that flow into ASEAN?
There is a slight risk, but I actually would like to look at the advantages of that. The reason I say that is because when Chinese companies come out into ASEAN, they need to partner with the local players. So it doesn't mean that Chinese have to own 100% of their business. I think it's important that as China rolls out its China Plus One strategy, they have to work with partners in the region. And we see that happening a lot. And like I said, CGS International ourselves, we have actually done one M&A deal where basically a Chinese company bought over an Indonesian company, and they didn't buy 100%. Yeah. So I think if you can actually calibrate and have Chinese parentage, but strong local presence, I think it's going to be a win-win for everyone.